Today is February 18, 2023. To be or not to be? That's the question. William Shakespeare wrote that line a long time ago. Little did he know that although it meant man's mortality, a decision of to be and not to be, essentially relates to day trading. A long time ago, I was at the peak, Boise, Idaho, Lucky Peak Reservoir. It was about 2 a.m. and the world was collapsing around me. And for that night, the moon did not show itself, and it was dark, very dark, very similar to Psalm 23. And I took a picture of myself, and hopefully that picture will remain with me forever. See, Boise State, state of Idaho has a city called Boise. It is the capital of Idaho, and within the city of Boise, there is a university called Boise State University, and it is commonly represented by the orange letter B. Both of my kids last year graduated from the Boise State University. I hope they are doing very well. One day, when I become consistently profitable, I'll send them cash. Now, the letter B is prominent because the buses that goes through Main Street here has the letter B on it, the bright orange B. Now, as I stood on the peak of Lucky Peak Reservoir, I contemplated the strategy, the exit strategy. And God intervened and erased the darkness from my life. And here I am to record this video. Now, the interesting thing about to be or not to be is essentially the crux of being a day trader. Essentially, when I look at a chart, it's either moving down, moving up, or moving sideways. Essentially, those are the three things that it does. So, when the stock is moving sideways, is it to be or not to be? Meaning, will it continue or not continue on that path? The other is, when the stock is moving up, is it to be or not to be? Will it continue climbing up or will it reverse? Essentially, those are or stay sideways. And I've seen this particular characteristics of stock movements a few days ago, where the CPI numbers came in, and then it started out the day at a high level. It essentially created a plateau, which means that it continued going up, established a plateau, and then started to drop. It continued to drop, and then went to sideways to create another plateau, and then it started to drop, but at a shorter decline, and then created a plateau again, until at a point where it dipped a little bit and then started to reverse. So the market is based on the three things, but from a single point perspective, is it going to be or not to be? Okay, to be or not to be. Looking at it from a perspective of a single point. See, this is very interesting, and I'm being very descriptive about it, even though I don't know. I don't have a PhD. I don't have a master's degree. I have a bachelor's degree that's probably outdated. The only thing that I have is just purely speaking in terms of experience, and I don't have mathematical explanation or in-depth reasoning behind or a statistical data on a probability on a historical bell curve distribution of understanding how that works. Now, here's where the interesting part is. I've noticed that there are chart patterns based on the fundamental movement. When the fundamental movement occurs, it occurs usually in a long transition. Fundamentally speaking, let's say I'm Google and I'm Microsoft and Google is competing in chat, whatever, GPT or whatever it is. Apparently, it's a artificial intelligence. The artificial intelligence part of it that forms a new understanding to create a new database to distribute in a newer perspective instead of that seems to be the transitioning period where a software is written. That software creates new ideas based on its own understanding to capture new understanding. That is artificial intelligence. Okay, that in itself is artificial intelligence. Intelligence essentially means taking a rigid form, creating something that is new, and encompassing it, and then structuring it and gobbling up that thing, growing like an amoeba, right? Amoeba goes around, grabs something, and makes part of it. That's what Chat GPT, whatever it is. Chat GPT, I think that's what it is. It's artificial intelligence. Now, so how is that related to? So overnight, let's say the Google artificial intelligence is fallible on a massive scale. Overnight, it could drop, which it did, about 11%, and then Microsoft could jump so much, and so overnight things could change on a significant change in its fundamentals based on the technology that is used to compete in the marketplace, right? But in general, like Warren Buffett said, brick and mortar companies will tend to have a long period of movements. It'll have a long periods of movements. But in that time, there's going to be a lot of wiggles, but it's going to move long like that. But a technology company could be within 3 months. Within 3 months, it could be here and it could drop here. It could move up there because the fundamentals can drastically change based on the proprietary technology that they have, right? So that means that on a fundamental basis, it'll move, stock will move, but the intraday movements will be choppy, and that choppiness can be taken advantage of based on this principle of whether it's going to be or not to be. And so on a big scale, I can look at where am I going with this? I even forgot what I'm going to talk about it, but it's very, very interesting. So what I will do now is to develop a strategy where I completely understanding whether a chart is reversal or whether it's a continuation, whether it's in a state of continuation or whether it's in a state of reversal. When I have those two things in mind, then it allows me to enter and take advantage. But somehow, if my thesis is incorrect, then I can exit because I know with a statistical probability that based on my fundamental and technical analysis that is going to move in a direction of my thesis. So my concentration, the part about the money management is irrelevant at this point up to a certain level. If I have $2 billion, I will be the person who's impacting the movements of the stock on a temporary basis. Okay. So if the stock moves about $1 billion or $2 billion a day, and if I have $1 billion and I'm buying, obviously it's going to go up because I'm the one who's buying, right? So usually what happens is that there will be like um, 490 million that are sold and then 510 million that is bought, which causes the market to slowly move up. But if I'm the person, anyway, that's how it works. So my concentration is studying to be or not to be. Okay. Is the pattern moving in the direction that is going to, is it a continuation pattern? Yesterday I observed this on Apple. Apple was doing this. Apple goes like this, trickle down, trickle down, trickle down, boom. Trickle down, boom. That is essentially a flag pattern. Flag pattern, generally speaking, is a continuation pattern. It is taking a breather of selling a little bit, selling a little bit, selling a little bit, profit taking, and then boom, going up. Selling a little bit, selling a little bit, creating a pattern. That is essentially a continuation pattern, which means that when I see that, I need to get in. When I see that, I need to get in. That's the continuation pattern that I can look at. That is called a to be. Now, when I see I've observed this as well. When I see a stock does this has a rounding pattern, right? A rounding pattern, not like a spike drops down like that, or something like that. Can also signal a reversal as well, but a more significant, and there could be other types as well. Even on a stock that is moving up, reversal, and keeps continuing, there's a pattern of reversals that occur. And usually this rounding effect is a precursor to its movement, such as the cup and handle movement. Cup and handle movement, down, and then a little bit, and then shoots up. There is a significant time domain component and the amount of depth that is associated with this cup and handle, as well as such as the double bottom. And I'm excited. That's why my voice is elevated. It is to be or not to be, whether the pattern is continuing. So when I focus on that, then I can adjust my risk ratio at any point I want to a certain level, and I will be able to take advantage of the market as long as I become the professor of to be or not to be.